A very good morning to one and all. So, today we are going to be looking at a very interesting topic about doing business in Kenya. Credits for this research to Mr. Vigneshwar and Mr. Jugalgala. Certain legends used in this presentation: CIT, Corporate Income Tax, CPI, Consumer Price Index, DTAA, Double Taxation Avoidance Agreement, EODB, Ease of Doing Business, FDI, Foreign Direct Investment, GDP, Gross Domestic Product, PCP GDP is per capita GDP, and VAT is value added tax. So the scheme of presentation today is we'll have a brief overlook of about the country and setting up the businesses, the registration with BRS, the taxation system in Kenya, visas and permits for foreign workers and employees, exchange control regulations, and finally the conclusion. So, having a look at Kenya as a country from a demographic and wealth perspective, it's got a population of 53.7 million people as on 2020. It's the seventh largest country in Africa and 27th in the world. The nominal GDP of Kenya is $99.2 billion as on 2019, and PCP per capita GDP is about $2,010 per person, which is about a ranking of 140th in the world. There is 27.51% urbanization as of 2019, and their primary real wealth creators are in the form of oil and gas, limestone, gypsum, soda ash, diatomite, gemstone, fluorspar, zinc, wildlife, and hydropower. The currency unit used in Kenya is Kenyan shillings. An approximate exchange rate for a dollar is 109 Kenyan shillings. And the annual CPI is 4.9%. Looking at the rankings of ease of doing business, Kenya ranks about 56 in the DB ranking with 73.2 as a score. And if you look at it from protecting minority investor, it stands at first rank. And if in terms of least, about registering a property is about 134, starting a business about 129. So out of a list of 190 countries, it's standing first in terms of protecting minority investors. So coming to GDP by activity, by far agriculture is still one of the largest in terms of GDP. The data given here is from 2015 to 2019, and in terms of the lowest is mining and quarrying, transportation and storage, and information and communication. Manufacturing, if you see, it is growing. Kenya having a good amount of population, it also makes sense to have local manufacturing of various goods and services. Though there is local manufacturing of goods and services, predominant portion of their goods are imported from overseas, which you can see throughout 2015 to 2019. Import of goods has been close to about 18,000. So that's one of the largest in terms of the bar diagram is concerned. Exports are also there to other African regions. Import and export of services is forming part of a very small portion of the total cross-border trades. Coming to certain popular locations for setting up business, Malaba, which is a small town in Busia County in the western part of Kenya, has borders handling about 70% of cargo in transit to and from the Mombasa port to neighboring landlocked countries. It is the best place in the country to get construction permits and the third best for enforcing contracts. Narok, which is most suited for supply of imported clothes, supply of cooking gas, supply of spare parts for motorcycle restaurants and courier shops, renowned for its significantly cut bureaucratic red tape in the business environment. Thika, known for its perfect blend of pineapple and coffee farms, transport businesses, middle income real estate, supply of construction material, ICT based, and grocery supplies, are very well performing here. Cheaper rent prices and good road infrastructure makes it an attractive business spot. And Garissa, the town enjoys relatively good infrastructure and is strategically located next to the ongoing LAPSET project, Mombasa Port, and NEP Frontier. The World Bank once recognized this place as the best town to enforce contracts. So these are popular locations, but there are other locations as well where many foreign investors do business in Kenya, depending on the nature of services and nature of manufacturing they do. So coming to setting up of a business, there are different regulatory departments that will have to be in touch base for setting up the company. First is the Registrar of Companies for Business Registration, TCA, Tax Collection Authority for the Kenya Revenue Authority. National Social Security Fund, who's the regulator for Social Security Scheme, Central Bank of Kenya for Overseas Exchange Control Policy, and KIA, Kenya Investment Authority for investment promotion activities. So there are various types of business structures that can be set up, which is starting from a company's format up until a partnership, sole trader, or a limited liability partnership. And in the form of company, it could be either a private or a public company, or it can be a branch of a foreign company, depending on the nature of the business that's being set up in Kenya. So coming to the registration services. So the first step is to do a name search and reservation, which takes about a day, and registration of a business name takes about 1 to 2 days after getting all the NOCs, no objection certificate, submission of registration form and other related forms along with the supporting documents, and then the company is formed, and then opening a bank account can take 1 week subject to all the due diligence documents being provided to the bank and obtaining business license and starting the business. Coming to the type of documents that is to be uploaded on the online portal system for the purpose of setting up the company, it is a company registration form which is called as CR1, application for reservation of company name CR14, MOA, particulars of directors and secretaries in CR2 and CR10, statement of nominal capital, articles of association, notification of the residential address of the directors and secretary in CR8 and CR12, copy of the Kenyan national identification of each director and secretary, copy of the Kenyan foreigner certificate. In the case of a director who is not a Kenyan citizen and is not a resident in Kenya, a copy of a director's passport is required. And the cost of setting up fees is about 10,750 Kenyan shillings and is regardless of the nominal share capital where applicable. This comprises of the registration fees, official search results, and the convenience fee. No stamp duty is applicable at the point of incorporation of the company. With this timeline, about 10 to 12 days with the bank account, a company can be set up in Kenya. Other conditions for a public company, there are minimum 2 directors, no maximum limit, and minimum age limit of 18 years. And of course, the company should have a company secretary. In the case of a private company, minimum 1 director, no maximum limit, maximum 50 shareholders, and need not appoint company secretaries if the share capital is less than 5 million Kenyan shillings. For a branch of a business establishment incorporated outside Kenya, which is a foreign company, and a foreign company is prohibited to do business in Kenya unless it is registered in Kenya as a branch. And a local representative is always required to be present at the register office of the company in Kenya when the office is open. He may be any person of the company's choice but must be resident in Kenya so that all the regulatory department has a one-point contact in Kenya. Coming to the taxation system, there are 4 different types of collection to the government department. One is in the form of income taxes, custom duty, excise duty, and value-added tax. The average rate of income tax is about 25%, and imports into Kenya are subject to a VAT of 16%. Individuals are taxed at a slab rate basis. Maximum rate is 25. Corporate taxes, resident is 25 and non-resident is 37.5. Method of collecting income taxes include corporation tax, which is and pay as you earn, withholding taxes, advance taxes, etc. Taxable goods from a value-added tax perspective are at 14% for general rate. Petroleum products, except for liquefied petroleum gas, is at 8%. And the threshold for registration when an annual turnover exceeds 5 million shillings, the company will be mandatorily required to register for the value-added tax. And the rates for excise and customs depends on goods and services, and there are 2 types, which is specific and ad valorem. Now coming to the registration for personal identification number, what is called as a PIN, which is an identification number used while doing business with Kenyan Revenue Authority, other government agencies and service providers. Personal includes both individual and artificial person. It could be a company, a club or a trust, and a sole proprietorship will use the proprietor's individual PIN for all transactions. And who all should have a PIN? People who are employed, engaged in business, having rental income, wishing to apply for a loan for higher education loans abroad, government agency providing loans to needy Kenyan students for pursuing their higher studies locally and abroad. So in principle, all are covered for applying for the PIN. And persons intending to perform transactions like registration of properties, motor vehicles, company, licensing for the trade, application for VAT, underwriting insurance policies, and facilitating imports of goods, etc. The KRA is a regulatory body for tax and custom compliance in India, just like the income tax department in India. So procedure for registration of the PIN, it's a very straightforward process which is done in the iTax portal. Residents receive their PIN certificate instantly after completing the online registration form. Non-residents receive an acknowledgement receipt where they should be presented to the KRA alongside other relevant documents to complete the registration process. Detailed list of documents required for PIN can be checked in the KRA's website, but pretty much all the KYC documents. Tax incentives. Kenyan KRA also provide various tax incentives for investors. An investor who incurs capital expenditure on building, machinery used for manufacturing is entitled to an investment deduction equal to 100% of the cost. And for capital expenditure on building machinery exceeding the Kenyan shillings of 200 million, if the investment is outside Nairobi, the investor can claim 150% allowance as well. Capital expenditure on building used for industrial purpose is eligible for 10% allowance on the cost. Public expenditure on the construction of public schools, hospitals, roads, or any similar infrastructure will be allowed an allowable deduction. Capital expenditure incurred on purchase of telecommunication equipment or right to use a computer software and used in business is entitled to a straight line deduction at the rate of 20% of such cost. Capital allowance is granted to a farmer who incurs capital expenditure in the construction of farm works at the rate of 100% of the cost. Special tax incentive, one is the special economic zone. So capital expenditure on buildings and machineries for use in SEZ shall be entitled to investment deduction equal to 100% of the capital expenditure, and corporate taxation is at the rate of 10% for the first 10 years, 15% for the next 10 years, and withholding taxes on payments made to non-residents is at 5%, and dividends paid to non-residents by the SEZ entity is exempt from taxes. And coming to the EPZs, which is the export processing zones, a 10-year corporate income tax holiday is available to certain designated enterprise that undertake activities consisting of manufacture of goods and exports only, and a 25% tax rate for the further 10 years. 10 years withholding tax holidays are also given on dividends and other remittances to non-resident parties, and 100% investment deduction on new investment in EPZ building and machinery. Tax benefits for newly listed companies, and for those companies which are listed newly, 20% rate if 40% of the issued capital is listed for 5 years, 25% is the rate if 30% of the issued share capital is listed, and 27% is the rate if 20% of the issued share capital is listed for a period of 3 years. So these are companies which get listed on the stock exchange. Coming to visas and permits, single entry visa, transit visa, and courtesy visa, the three types of visas, and can be applied from evisa.go.k. Issued for single entry for persons whose nationalities require visa to enter Kenya, either for business, tourism, or medical reason, and it's for a valid period of 3 months. Transit visas is for 72 hours connecting through Kenya, and courtesy visa is issued to diplomatic, official, and service passport holders coming into the country on official duties or transiting through Kenya to a third country for official business or duties. It is issued free of charge. And now we look at the exchange control regulations of Kenya. There are no exchange control regulations in Kenya directly. However, commercial banks are required to report significant foreign exchange transaction, all transaction in excess of $10,000 to the Kenya Central Bank. A foreign investor investing at least USD 100,000 in Kenya may apply to the KIA for an investment certificate in the prescribed form. So most of the commercial banks take care of the sub-function for the exchange regulatory requirements and report to the Central Bank of Kenya. As all countries have come into a reform mechanism due to the impact of COVID, Kenya also has few reforms, and let's look at them in detail. Kenya economy, for the first time in almost 12 years, in the second quarter of 2020, contracted from on its GDP perspective as the impact of coronavirus pandemic battered key sectors. GDP fell 5.7% compared with growth of 4.9 in the 3 months through March and expansion of 5.3% in the same period a year earlier. Post lockdown, there were substantial contractions in accommodation, food service, education, taxes on products, and transportation storage. Consumption of light diesel, a key input in transportation activity, declined by 32%. Cut flowers and vegetable exports fell by 35%, hurt by the lockdown measures in key markets such as European Union and the UK. So there was a great suffer in terms of an impact on the economy. And from a reform point of view, from tax measures, the corporate tax was reduced to 25% from 30, and the reduction of maximum individual tax from 30% to 25 if the income exceeds 47,059 Kenyan shillings per month. Basic exemption fixed at 24,000 Kenyan shillings per month. Reduction of turnover tax rate from 3% to 1%. Reduction of standard VAT rate from 16% to 14%. And order to expedite the verified VAT return clearing process. An extension of time limit for filing of various returns and tax payments. Coming to fiscal measures, the central bank reduced the central bank rate from 8.25% to 7.25% and CRR from 5.25% to 4.25% in order to increase liquidity. Voluntary reduction of salaries by President and Vice President by 80% and that of his cabinet by up to 30%. Settlement of verified pending bills amounting to Kenyan shillings 13 billion within the next 3 weeks. Loan provisioning norms were made flexible for banking companies. Temporary suspension of listing with Credit Reference Bureau for person who default on the loan obligation with effect from 1st April 2020. So to conclude, Kenya is the third largest economy in Africa and has been ranked 56 out of 190 countries in EU Ease of Doing Business report issued by the World Bank. The largest East African region is now one of the fastest emerging oil and gas frontier regions in the world, with Kenya expected to become an oil producer in the near future. Performance of agricultural, forestry, and fishing remains strong in spite of the COVID pandemic hit, which indicates high durability and stability in these sectors. The country is gearing up to move from an agriculture and tourism based economy to one that is based on mineral resources. Most of the mines and cement plants are privately owned in Kenya. Therefore, the future business prospect in Kenya is expected to be predominantly in agriculture and allied sectors, and we can see a lot of growth coming in because in Africa there are some countries which are strong foothold, and Kenya is one among them in terms of infrastructure, ease of doing business, the banking and regulation sector is concerned. So there's going to be a good boom back and a jump with effect from COVID to recovery in the market. Kenya can see to boom in the next few years in a very strong manner. Thank you for joining us for today's presentation. We look forward to meeting you in yet another interesting webinar in the coming weeks. Thank you and have a nice day and stay safe.